On that note, would love to introduce our next speaker and fireside chat for the evening, Ramesh Bafna, who's holding the purse strings at Zepto. I really have had, I'd say, the privilege to see Ramesh in action every day at work. He was my CFO at Myntra. And one thing I think fundamentally believe that good friendships and relationships are forged through cycles when things go up and down. And if the recent Biden-Trump transition is anything to go by, just pure entertainment value aside, and how much, I would say, friction and uncertainty when administrations change. We had a situation like that 4 years ago at Myntra when we had like a CEO change and the entire C-suite change with that. And that's when Ramesh was parachuted in from Flipkart to, let's say, manage the situation. And I would never forget that all of us in the CXO-1 leadership team were navigating incredibly uncertain times. And Ramesh was one of my allies who gave me lots of good advice and helped me, I would say, not just navigate precariously, but also set me up for success within the Flipkart group. And for that, I'll always be grateful. One of the things you'll notice about Ramesh when he's speaking here, that he has this very calm, quiet, and stoic external demeanor, but he has this amazing ability to deliver the most ruthless and brutally hard decisions when it comes to, I would say, financial acumen. And these are not decisions just about cutting costs or layoff. These are, he'll ask you fundamental existential questions on why do we need this at all? And he's one of those leaders who never uses, I would say, rank and file. You'll never hear, because I said so, from Ramesh. It's always about building trust. It's about reaching out, trying to understand what the other stakeholders thinking about. And I think he's really rethought and transformed the way people fundamentally look at finance as a function. So on that note, I want to play a small video and welcome Ramesh on stage after. Picture this. It's April 2023 and Zepto, the 10-minute grocery delivery startup that's been taking India by storm, announces a new addition to their C-suite. Enter Ramesh Bafna, a seasoned finance veteran with over 2 decades of experience stepping into the role of CFO. Now, Bafna isn't just any CFO. He has been in the trenches of India's e-commerce revolution. He's held purse strings at some of the biggest names in the game. We're talking Flipkart, Myntra, and most recently, CoinSwitch. Zepto didn't just hire Bafna to balance the books. They brought him on with a very specific mission: to take the startup public in the next 2 to 3 years. At Zepto, his priorities are clear: fostering a culture of financial excellence, enhancing shareholder value, and supporting the strategic vision of Zepto. Within months of his joining, Zepto secured a whopping $1.5 billion in funding across 4 rounds, including the recent $350 million domestic capital round led by Motilal Oswal. This was the largest of its kind in the Indian startup ecosystem. But it was this LinkedIn post that prompted me to reach out to him to speak today. He often uses the Dream Team hashtag to discuss the importance of finance teams in business success, emphasizing on continuous learning and scaling teams as companies scale. In the high-stakes world of 10-minute deliveries, Bafna is proving that when it comes to financial acumen, he can deliver in record time too. Welcome, Ramesh.
Thank you so much. It's a wonderful video. I'm not used to this.
Do a test? Yes, awesome. Thank you so much for making it. I know you have a housewarming and all the very best for new memories in a new house, and you're going to rush to Chennai.
Thank you.
But thanks once again for joining us. I obviously want to start with the backstory to that LinkedIn post. And it's not, I of course know you personally, but it's not very often that leaders go public and are willing to share how they build their teams and be so open about sharing credit. So take us to the backstory to that post.
Yeah, sure. And we discussed this, right, in terms of this post. It came naturally to me. This was in Soho House, Mumbai. And this was the day we finished our due diligence for the $1 billion raise, and it was extremely hectic uh, in terms of closing with EY in the entire due diligence process. Once we were done, saying let's go, and then relax there on this in the Soho House. And when we were discussing, talking about, and the good thing is when we go for dinner, it's like quiet. It's not the music one. That's more the offsites. But when we were talking with each other, we like looking at their own journeys, where they're coming from. All the team members, in some form and fashion, have worked with me in last 15, 20 years of my career, and among themselves they know each other. So the objective when I started at Zepto was to blitzscale in terms of scale. Adit and I had discussions in terms of how do we build a world-class finance function, which is uh, extremely high on governance, financial standards, and also not just that, but building a very strategic team in terms of shaping the entire journey. Given it is extremely fast, right? So we don't have time to take about a month or reshape in those things. How do you do it on a real-time basis, right? So all of that journey in terms of what we did at Flipkart, Myntra, and came together, and then it just the moment I posted it, and a lot of people resonated with it.
Yeah.
So it's
Awesome. I
that's the
think
story.
we have a lot of founders in the room, and some of the questions that we had polled was actually about blitzscaling teams.
Yeah.
And given you have done this all in the last 20 months, what are some of the hiring strategies that have worked for you? Are you a hire fast, fire faster kind of person? Do you hire top down? But any hiring strategies for founders?
See, I'll tell you what works for me, and it can be independent for each company, right? The way I've worked and I've gone through is look at the org structure in terms of what should I be delivering. If I have a world-class finance function, I also handle legal, procurement, and other functions. In terms of looking at the org structure, putting in the exact deliverable from each of these functions, and then kind of putting L1, L2, L3 teams, having a deep understanding of what needs or what's expected out of a finance team, and then you're going back, okay, for this role at this journey, right? And this is the requirement in terms of going extremely deep, data oriented, but also can build automation, but has a strategic insight. So the moment I put down the org structure, close my eyes, and figure out which name comes to me in terms of having the right fit, and that's when I put down the team names. And this all of this happened before I joined Zepto. It's when I said, Adit said yes, I'm going to join. From that day before I joined Zepto, I've had the entire leadership team, right? So that was a moment.
And through this crazy blitzscaling journey,
Yeah.
how do you manage and balance? I would say these are all high performing stakeholders that you've hired, right? So how do you balance, let's say, company ambition and personal ambition, and how do you just drive that message of company priorities at this speed and scale?
Yeah, and I the last question, right? Hire fast, fire faster. The way I have done it is gone deeper to understand the personalities, and also what has worked in the team. It is the combination of team that works well, right? So if you have a boss which is very detail oriented, but then can have a team which is more communications, like more stakeholder management. Sometimes the same people but different combination kind of set together really well. So looking at combinations are important, and I have not fired people uh, just for not being able to uh, for from just like that, they don't fit in like that. What we have done is, if you are a high performing team, let's say any average guy comes in or a girl comes in, and you put them into a high performing team, the natural average for themselves also goes up meaningfully high. And and that's the strategy where we have got great team. I've been lucky to get that, and then we hire from campus, CA campus, MBAs, and put them into high performing team. The kind of blitzscale these guys also come to is phenomenal, right? So the campus strategy is amazing, and in general, give a lot of depth and time in terms of scaling those teams, right? And coming to your question on the matching of individual ambitions and the company ambitions. See, there will be times where companies growing. In last 18 months, I've seen three Zepto, right? Zepto 1, 2, 3. Every 6 months, it's double the revenue. We have seen in last 8 months, we have 3x from the kind of base we had. I just recently posted that from $1 billion to $3 billion in last 8 months, 3x. Uh, so to that extent, the company's ambition on the professionals to step up and grow, that step curve is very, very steep, right? And a lot of time it comes about looking at the leaders, looking at myself, right? I like when I came to Mintra. Before that, I was handling business finance for three categories at Flipkart, which is a unit heavy category. But to take up a role in Mintra is complete CFO role, and for me to change that, right? To adapt and scale, that's up to the individual in terms of how do you do it. And then taking up Zepto's role, it's completely different. Now I do legal, ethics, compliances, a lot more procurement. So one has to go through that journey individually. And what enables is if you have the ecosystem and the manager talking to them, saying that, you know what, you are fantastic in this, what's the next scale, right? And then what's your ambition like? And that's where company's ambition has to be communicated clearly, and also not only communicated but guided in terms of what is exactly needed in terms of scale. And then likewise the employees or the team's ambition in terms of what they want to be, and you can find a way in terms of putting this stitching it together.
Any insights into how we've built the function out at Zepto? And you used to never say yes to us, but I'm guessing Zepto, given the billions of dollars in the bank, you're probably saying yes more often. But I think capital allocation is a super critical point for founders again in the room. And
Yeah.
so, how do you prioritize capital allocation?
Yeah, my
Zepto
style
is an
doesn't change,
exception,
okay?
but for let's say an average company who has capital allocation issues, yeah.
Even Zepto, we just raised funds now, right? But Zepto was born in a extremely tough bear market, the tough of the bear market, right? When we raised the 235 Series D, and it's all about cash management. I had weekly reviews with the management team on cash flows. Forget P&L and balance sheet, right? First thing, everybody knew across the companies, where is my cash getting consumed? What are my sources of funds? Can I invoice on monetization on day one instead of day 30? Can I automate stuffs which will give me source of funds? And also, can I call the brands in terms of the entire automation around the source of funds? On the vendor payments, negotiate hard in terms of credit periods, and also build a tool around everything in terms of which has giving you the visibility around the capital. So source of funds, extremely tough market when in 2023 beginning for us. And after getting the money, it becomes even more critical in terms of how do you really allocate. And it's like investors investing into company, the role of finance along with the CEO becomes how do I allocate the capital within the different projects which are coming up, right? Should I do capex or buy or lease, or should I invest in people in data sciences today or tomorrow because it's extremely high on cost? And likewise on customer acquisition, dark stores, what's the right curve? When do you invest? What's the ROI paybacks looking like? So measure everything to the extreme depth and details, and yeah. So
I remember a thing you used to always tell us on Ramesh's favorite line used to be to the business leaders used to be learn the difference between an investment and an expense. I don't know if you remember that, but and you had to be convinced by whether a particular spend or a capital allocation was going to be an investment ahead of the curve, or is it just an immediate expense.
Yeah.
But take us through maybe some examples of these early decisions that you've made ahead of the curve that have set you up for success at scale at Zepto.
Sure, I'll tell you in finance function itself, right? So we had to when I joined, it was a 2-year-old company. Uh, at that scale, and Adit knew that it's going to scale very fast. I asked him, why do you want to hire such a uh, senior CFO at this point in time? It's just a 2-year-old company. He's saying, you know what, it's going to scale. I know for a fact that I can feel it that it's going to scale, and we need the right team to come in. Otherwise, it's going to break very fast. Uh, to move into ERP like SAP was in year 2, and complete it, a move helped us so that it doesn't break. Then invoice processing, I'll tell you, it's basically, fundamentally it's in the details, right? So invoice processing, we had 80,000 invoices, 90 people doing it in day 7. Today, it's tripled in terms of number of invoices, but the number of people are 1/3 of what it used to be. Right? It's complete automation, OCR, all of this. It's available. Partner with other startups who have built this, right? And 85% of my invoice processing tool has a direct accounting entry into SAP. Then building into host to host payments on his integration with the bankers so that your governance standard improves meaningfully. So looking at every element in terms of finance function. Likewise, what we have done on the business side, right, is transparency in financial statement and democracy. What happens is sometimes in few companies the data becomes asymmetrical and it becomes political in power centers. And my role was, what if this data is available to all at the same point in time, right? So then everybody has the exact same data, both the ops team, the business team, the marketing team, the finance team, CEO. And that's when we build the app. It's an internal app where every single information is available. Some are on real-time basis and some are on the daily basis. So that a lot of conviction decisions early to invest is extremely important. And one thing which I would say is, I had a discussion with the founders in terms of investments in engineering and product, specifically for finance. Not many companies do have this, right? So FCC, we call it finance controls and compliances. There's an engineering bandwidth and a product bandwidth dedicated for this. So a lot of initiatives have been able to do this. Otherwise, there's no way for us to kind of manage the scale and complexity.
I'll probably segue that into what does a finance function look like today in terms of tech, and what does the modern CFO tech stack look like?
Yeah. So I like explained that. So having this kind of scale and agility, what we have done is we have partnered with few startups on a lot of areas, like on the tax with Clear and few more, and the rest we have built everything in house, purely because engineering and product bandwidth was allocated. And the way I did it, right, there's a lot of things to do on automation, but which ones to do first, prioritization, that becomes the critical piece. The way I've gone through and it helped me significantly is upstreaming. If there are 15 problems in downstream, just keep going up, saying that why is this problem originating? Where is it originating from? And can I build a system for that upstream problem first? Hopefully by that time, the downstream problem out of 15, 5 or 7 are resolved anyway. So for simple example is for legal, we build contract management system. You can buy it also. It's a simple tool, but the kind of varied, we buy from farmers to we buy from national, international, we build the entire contract management system in-house. Promotion engine, a lot of brands give discounts and promotion scheme. And this is where a lot of companies kind of do it on email, put a scheme, download, put on email. There's a lot of dispute with the brands, collection issues, hazard things. We just killed it, right? Eliminate the problem statement, completely automated this in-house. The scheme ID gets generated. The brand can upload, I can upload, brand can approve. The scheme ID is directly linked to a promo ID, is directly linked to accounting, it goes to SAP. So no issues from that perspective. It improves the governance, and then it kind of improves the brand trust as well.
Probably the most cross-functional team in an org, given that you actually control the purse strings. How do you manage stakeholder conflicts and this constant push and pull?
See, conflicts, push and pull, you've seen me in Mintra in terms of me and the CBOs. So it's natural. It is extremely important to have conflicts and extremely important to be passionate about. And that's the only way in which the same problem can be looked at from every single angle. Right? And that's where the maturity of founders also come in to be like, to look at all aspects together, right? So if I'm between me or the ops head or the business head, there are conflicts, hazard conflicts every day, right? But the maturity is how do we, it's about the conflict, it's not about the people. And then it's not an or function, right? To growth or profit. It is an or is for uh, lazy people to that extent. It has to be and where you actually have to build operating leverage. And that's where we have gone very deep on those pieces.
I was going to ask you, can you ever be prepared for $1 billion fundraise? What is the prep required?
Yeah, see, it's like CA exams, right? You cannot study 2 days before the exam. You have to practice it. So that's the saying, right? Sweat in practice, bleed less in the game. And this $1 billion raise is just an outcome of a lot of things which have happened through it. And if you look at last 12 months, the kind of area, the depth and details we have executed, paisa by paisa, detail by detail, at every aspect of P&L, cash flow, and balance sheet, which has helped us in terms of being prepared. I'll give you a simple example. GMV to cash reconciliation seems to be an accounting problem, right? But what is the first thing an investor would look for? Is the revenue reported by the company genuine or fake? Simple. That's the highest problem statement. What if I completely automate that, right? Today, for a $3 billion run rate, every order ID to bank is mapped on a daily basis, right? So when any due diligence can happen, anybody can go to the tool, look at the data, be it COD, prepaid, cash. Completeness is critical. So it cannot be 90% isme hai, 10% somewhere else. 100% fully automated. You kind of kill the biggest problem statement. An investor would look in for the genuineness of the numbers. Right?
That's interesting. I was going to ask you whether you also carry the burden of knowledge sometimes, and how do you switch between going back to playbooks and not repeating the mistakes of Flipkart versus thinking first principles and grounds up?
See, it's neither either or. It has to be, and I have to evolve. And see, what has helped me is phenomenal experience in Flipkart starting from 2014. I built the first marketplace for Flipkart, and then Flipkart Fashion, Myntra, BGM. All of those categories in terms of blitzscale we were doing, and 14, 15 was blitzscale. So to know and to feel it that this can happen, that kind of helps. But to also be aware that this is different, right? And think more in the present in terms of how can you take that experience but build innovation around this. So Zepto is a bottoms up quick commerce native company, right? So whatever we do, we're completely focused on 10 to 15 minutes delivery, right? So WMS system, the order management, everything, customers, how we look at the app, everything is focused on speed.
Given all the DD experience, just keen to know what some of the largest investors, what were some of the hardest questions you got asked about quick commerce?
See, if you look at the DD per se, discussions are two parts on the controls and governance, and then on the business in terms of growth and business model itself, right? So under controls and governance, there's no shortcut. The pieces which I explained you in terms of revenue recognition, on the advocacy of provisions, inventory health, all of these pieces are hard problem which you have to solve every single day, right? And then DD is just a output, saying it's a result of whatever work you have done. So the questions have been very deep. with this kind of raise? And the answers, what we have done is we went to the toughest partner of EY to saying that aap dekh lo, you ask all the tough questions to us. We will give you all data points. And once we get Atul Mehta to say yes, all green from EY, then every investor is like confident about it, right? So that solving for hard things. And then on the business model, it's extremely, the way we have gone it is we are extremely detail oriented at the depth of every single line item, at the cost, how will it transform, what are the levers, and have the depth and details genuinely, right? In terms of the technical answers, be it even finance team can answer about how the ops number of kilometers, what is the order per hour, EPH, all of that details available today to answer any business. So there were correlation analysis, regression analysis in terms of city, which city will work, tier 2, 3. So depth and details and preparedness is what helped us.
We've also polled a few questions, and I think undoubtedly the most popular question was North Star metrics. And how do you, what are your current North Star metrics? But more importantly, at each stage in growth of the company from seed to Series F now, how have those North Star metrics changed?
Yeah, I can't tell we are under the IPO work. So but overall, I'll tell you in general, right? In terms of the startup ecosystem and online, revenue retention, customer retention, right? Revenue retention, if you have a smile curve in your revenue retention, it becomes very clear. What is this smile curve? Let's say you have 100 customers today, customers kind of become, let's say, 40, 50, but the AOV the spend starts increasing. That's the golden metric to have in terms of smile curve. Then that's the proof that your PMF is there, you're kind of working on that piece. And then on the cost structures, right? What are the levers in terms of cost structure versus cost per order, and looking at the P&L slightly differently than traditionally from finance. I don't look at category P&L as a category, but I look at, and like Mintra, we used to look at category P&L and unit economics, right? I look at order economics instead of unit economics because the costs are at the order level and not the unit level, variations of it. So unlearning those pieces and then looking at customer cohort level P&L instead of looking at category P&L. Who is my mature customer? Who is my first time biased? What's the early life cycle? And the lapses who were active but who came back. So looking at P&L slightly from a business orientation perspective and not being a traditional finance, let's say that okay, this is the standard P&L. Yeah.
And I think the other one I alluded to slightly, but just to make sure I've got the audience question in, is how do you structure and set up finance teams from seed to Series A and late stage? And what would be your best piece of advice for early stage founders specifically? A lot of them tend to also deprioritize the function, I would say. But what's your advice on how to set up the function for early stage founding teams?
See, I'll tell you, in terms of having a strong finance team, you look at any startup which has failed and look and ask, was there a strong finance team there, right? In terms of putting that governance. So any founder today can look at the aspects of finance like accounting, controllership, taxation, right? If you are an ops heavy GST, how do you optimize? Today I look at GST as what is my ETR, effective tax rates? Is there a right structure? Do I have the right technical expertise in my team around that, right? So we have Ramachandra, who's like 25 years experience, just very, very deep into this. Then treasury, how do I manage the funds and cash flows, both cash flows in terms of borrowings or investments? A lot of founders kind of miss out and it's just money in the bank. I could have effectively utilized and put a good treasury yield on that. Second is not leave cash, any cash which is not generating interest income, right? So today my piece which I evaluate treasury is not only yield and yield on the risk they're taking, but also the ideal cash flow which is not generating interest income should be less than 1%, right? So that's the depth and details around it. And you have tax, treasury, taxation, accounting. Then you have business finance. Business finance is when a lot of companies don't start very early in the stage, but that's like really putting your vision, putting the entire economics into numbers, and actually taking and having the hard discussions on all the initiatives, so that that enables you to see the picture of what is the A/B. You can do a A/B testing, but Bestfin can convert uh, all the big bets you want to do into financial numbers. Then your probability of being right than wrong increases significantly. Right. So Bestfin is one. I'll tell you, more than finance, central procurement. If your ops, instead of decentralized, people are already stretched out. A tech team procuring tech tools, they would want to prioritize speed and get it at any cost. But you have a central procurement team, experienced but also agile, that saves significant amount of cost. Right. So that's how we started. And legal, have a great GC to start with, and then as we grow, you kind of add more layers into litigation, IPR, all of those pieces. So essentially, it's important to have full stack, but then kind of layer it as the growth happens.
Also, want to take a minute to tap into your over 2 decades, and therefore you've seen cycles, right? The ups and the downs. Take us through some of the, I would say, the down cycles, and again, just keeping teams together, motivating them. How when the going gets tough, and outside of Zepto, most founders would say it's a winter, funding winter.
It is a hard market, yeah.
But what's your advice on the down cycles, both in terms of teams as well as function?
See, I would say, and a lot of companies have done this well as well in terms of communication and clarity, and also ability to kind of pivot in the down cycle, but bring the teams together in terms of and being open about it. Like we had this financial transparency and democracy for all the leadership team, and then depending on the levels and requirements. So information is available. They trust in the company is very clear, and that kind of brings people together for more ideas in terms of, okay, I can do 3 more initiatives and get out of this. But there's no shortcut to this. Yeah.
I'm going to move to a quick rapid fire because a lot of questions were around, just changing the tone slightly to your day-to-day life inside. Okay. A lot of curiosity into how day-to-day work at Zepto is. So some light-hearted rapid fire questions. This is all polled from various AI tools, and we asked on LinkedIn as well. What's the most frequently ordered product?
By me?
Yeah.
I think bananas.
Right. I'm not sure if you want to say this, but what's your favorite P&L at Zepto?
I think now recently Zepto Cafe.
Zepto Cafe. And the inverse, the P&L that's worrying you the most?
And overall, right, in terms of how do we land from where we are in terms of growth, controlled aggression. Right?
Okay. I'm sure you have a lot of meetings, so least look forward to weekly meeting.
I think the other people look forward to my meeting the least.
Yeah, I can second that. All right. Top of your inbox this week. Maybe project pace.
Project pace we delivered. Yeah. Top of the inbox. We're mostly on Slack, but on inbox it's hiring.
Yeah. You want to talk a little bit about Project Pace since that was made public yesterday?
Yeah. It's been phenomenal, right? When we started this in terms of re-domicile discussions, and we met a lot of lawyers, everybody said 9-12 months in the minimum, and then and then we were discussing we have to do it in 4 months, and everybody, including the senior most lawyers of this best, they're laughing at us in terms of क्या joke कर रहे हो यार club types, and to do that in India and Singapore, what we started with is having the right technical understanding of the whole piece. How is it possible? What are the right technical pieces, which regulation, which clauses, depth and details around the technicalities. The second thing is why does it take time? Why does it take 9 to 12 months to understand the blockers or the genuine question? Forget the blockers, genuine question from a regulator to safeguard the interest of all the stakeholders, right? Can I preempt those questions today and be prepared? And I'll give a simple example like all shareholder approval is required, and it takes one hearing is 1 month, and then you get all the shareholders to approve it. Can I get this approval prior in writing and submit it along with the scheme and get an exemption for that? So, to understand the Gantt chart of 12 months day by day and to look at avenues which you can do it today and prepare it and seek exemptions, saying that it's already done 100%. So, to that extent, and then having the right partners who are with you. So, I mentioned like Deloitte, Raja and Tan, all of those people have deep understanding of the subject and are with you on the same level in terms of getting this done pace, right? So, the project itself was pace, and there will always be those softball and curveballs coming your way. There was one where you have to hand deliver the scheme to all your debtors, like creditors, right? There were 3,000 of them because with trade went brands and those things. This was Diwali week, yeah, and how do you do that? Hand deliver, then we had to sit back and say, okay, hand deliver can be courier also. It's not hand delivered by an employee, and then having that discussion and overnight calling a printing press. It's a 70-page scheme to 3,000 uh, creditors to be delivered the next day. Right? So to be there fully involved, have the data and details, and the empowerment is there. The teams can take the call, tactical calls at their own uh, requirements immediately, right? So they don't need to come back to anybody for that. So that's when we delivered, and it's been a great experience.
Thanks for sharing that. I'll go through this before opening up for audience questions. I think, as to top of inbox, funniest customer complaints.
Funniest customer complaints. This was during when onion prices increased, right? So the cost of onions, I could have bought a gold, something like that, right? And people buying samosas and dumbbells in the same order, right? Not complain, but yeah, it's an interesting fact. Or buying puja flowers and tonic water.
Okay.
We don't sell alcohol yet, but yeah, tonic water.
That's samosas and dumbbells in the same order is a nightmare here. This I have to ask: strangest budget requests that have come your way.
I give a strange look to every budget that comes to my way.
Well said. The same question I think that Anshu got asked, which is, what is that one surprising thing? It could be a customer, it could be a brand, a vendor, a product that became like an unlikely success on Zepto.
So we started with groceries, right? And fruits and vegetables, the core. Then we went to FMCG, increased significantly. One thing which has really gone ballistic is the innerwear category. Like, and nobody knew it. When we started it, it's like crazy sales. And yeah.
So Zepto Fashion is
Zepto,
next.
yeah. Zepto Fashion, we already started. We got Juby. So,
yes.
so,
the mafia is at work now at Zepto, I see. Yeah.
Fashion is going, beauty and general merchandise, so everything. If you want to get an inspiration, you want to explore, then you go to platform like Nykaa, Myntra, and those. But you know what you need. If you need a white US Polo T-shirt, then you need it, and then you get it in 10 minutes. So.
Awesome. With that, I'll open up for questions since we're also running out of time. But please raise your hands and we'll get a mic across soon.
Hi.
Your name and company
sure,
as always.
Thanks.
Yeah.
I'm Nitin. I represent a company called Tawaga. I'm an ex-consumer research analyst. I've seen several companies come to an IPO in the Indian stock market and so on. So as you come for your roadshow, the one question that you're going to be asked very often, which I have to throw it here, what are your levers for profitability, and how are your competitors going to attack that as well? Thank you.
Yeah.
And wish you all the best for it.
Thank you so much. So it's not only roadshows, it is any investment cycle, right? The question is in terms of, like I mentioned, on the top line side, it's going to be customer retention, because that's it's both the top line, it's also the cost element in terms of retaining that customer. How can you have the execution excellence in terms of putting the right order every single time, so your customer and revenue retention is phenomenal. And then on the cost side, looking at the depth and details of the cost per order, be it fixed cost, variable cost, the choices in terms of the last mile. So every businesses have different cost economics. For example, we have dark stores and dark store cost economics. Are dark stores turning profitable faster and faster than it was before? When we started, it took 24 months. Today, and it's been quoted by Adit before. And then over a period of time, now the dark stores which are coming are profitable faster and faster because of two or three reasons. One, when we started, we didn't have the ad monetization stack. Today, we have a fantastic one. So the new stores coming in on day one get the monetization benefit. Second, over a period of time, we've finished and improved our supply chain cost structures on the last mile. So we have optimized. So the new stores which are coming in are coming with a sharper cost structures for us, right? And then our density has helped us meaningfully. So any geography, like one geography like Bengaluru where I stay, it's the orders cross 3,000 orders a day. Now we have one more network store in place. We have two network stores in place. So density has helped us. Not only that, so we have also expanded to 65 cities now. So what we have seen is that question would be, is this a metro phenomena or can it be tier 2, tier 3 also? And again, that comes to understanding the micro market a lot more in depth. So in any urban city, you have a rural type micro markets. And in your rural or tier 2, tier 3 city, you have a tier 1 micro market as well. So to understand, personalize the SKUs, if it's a premium locality, you would sell a lot more organic, a lot more fruits, right? If it's slightly tier 2, tier 3 kind of a micro market, then you would sell a lot more atta dal chawal, right? So the SKU selection itself becomes extremely different. See, competitors will always be there, right? And they will be there, and it's going to new competition will come, all will intensify. What we are focused is how do I look at the execution excellence, and even if I'm doing great today, it's execution. If I'm like happy about it, done, ho gaya sab kuch, and if I defocus on execution excellence, it's going to be, I'm going to go back very fast. It doesn't matter, right? It's an extremely, and to that effect, we have hundreds of Six Sigma black belts in our supply chain, perfecting the time motion study, everything which we do within the dark store. So the focus is more on execution excellence. And today we have seen from a customer perspective, you need to have the right assortment, right speed, and right quality at a fair price every single time. Otherwise, they're going to shift to the one who is doing that all of them. So my focus is on those deliverables, on execution excellence, and that's where we are.
Hey, thank you, Ramesh, for doing this. My name is Kanan. I lead the video strategy at Disney Plus Hotstar. Wanted to understand your thoughts on the new age financial terms like adjusted EBITDA, which we lately have become very comfortable and familiar with. Do you think these are here to stay, or the real OG like PAT, PBT will come back? It is about the growth story, and eventually we'll have to resort to PAT and PBT, or things like adjusted EBITDA are here to stay for especially digitally first upstarts?
See, when it comes to accounting standards, right? It's very clear. The accounting standard gives you a specific way of putting the P&L, and that continues as is, right? If it then Ind AS changes or IFRS changes, then those change. Otherwise, nothing changes. From a management commentary perspective, it also depends on company to company. If it's a online company or a SaaS company, it depends in terms of to understand it better. So there are adjusted EBITDA concept which has come in. I think few people are doing it really well, so that retail investors or any other investors understand how do you look at scale and profitability and over a period of time. See, ultimately it's all about PAT, right? So there's no going away from that. But to appreciate the business itself, there is this concept which has been introduced for the management commentary perspective. Yeah. It is even today, it's PAT, right? If you look at the financials, still PAT. The accounting definition doesn't change. But on the management commentary, they kind of add more flavor to it.
Sorry? Yeah. So I'm Ashish. I run a venture called PropSearch. We basically help people make intelligent home buying decisions. So congrats on your housewarming. I just wanted to understand, when you're blitz scaling, right? How do you go about setting your goals and targets? Do you do it on an annual basis? How often do you revise it? How do you work with your investors for deviations from that? How does it work in a company like
Great
Zepto?
question, right? So even now we don't have annual operating plan, AOP. And so right now and it's not a standard April to March. That's for the accounting book closures and those things. But from business perspective, there is an investment cycle and there is a profitability cycle, and then again there's the investment cycle. The way we work with the investors is on what cycle we are, what's the investment going to look like, what's the payback period, ROI. So that's a discussion, and the outcome of that can be okay. Next 3 months, okay, this is the bet for next 7 months or 6 months. It can be any number. It need not be 12 months, and then we kind of work and close on those pieces, and then track. Maybe it can be Jan to June, or it can be any other month. So right now we don't have the luxury of having 12 months operating plan, because the kind of scale we have seen in last 8 months is 3 times at that kind of level. So it's definitely monthly in terms of planning for the next month, and because a lot of cost structures then kind of get set for the month, and also there's a larger 5-year view which get refined by the finance team, and not many people are involved in that. So finance team and the founders sit together, put a 5-year view also, so that you have a clarity in terms of what potentially the small adjustments today in the upstream can have a very large variance 5 years down the line. So those pieces do happen. So it's a combination of those things, but it's monthly, 1 to 2 months, and then slightly unstructured in terms of number of months for investor communication.
Hi, I'm Tanmay. I'm a qualified chartered accountant and working KPMG. So my question is that when we order from Zepto, so it charges rupees 1 for delivery for 1 month as a subscription. So from where you will offset this cost in your P&L, because Zepto is not charging a delivery fee on every order. So today, every day, Zepto is doing 7 lakh orders, 7 to 8 lakh orders. Okay, so if I take 7 lakh into 30 rupees per delivery, so it will be like around CRs. So from where it will be nullifying this delivery charges, because Zepto is not charging.
Yeah. So it is again on the customer cohort level. So it's not charging, right? So it depends on what is the order value. It depends on customer cohort. Are we in a new city where we are acquiring new customers, and hence the journey, right? So I don't look at the P&L. Of course, I look at the overall P&L, but the way to make the business decisions are not overall. It bases the understanding of each cohorts, understanding of the journey, and understanding the payback. So there are dimensions. Where is the source of fund? Gross profits are the source of fund, and then the gross profits can be on the product sale, it can be on monetization, it can be delivery fees. So there are multiple aspects of making money on the top line side. And then in terms of delivery fee is one aspect of a store dynamics and a consumer dynamics and a city dynamic, right? So it changes, and at the order ID level. And not only that, but also on the kind of orders you're doing. So if you're doing a nicotine order, then it is significantly higher, and versus a regular small cart fee, or let's say you're doing a much larger order, you ordered 3,000 rupees worth. So there is a playbook around it, and a lot more is now data science driven. So it's not even, it's a lot more is I'll go and automate it.
We'll take a last question from the lady at the back.
Thank you, sir. My name is Priyanka and I am from Indie Heart. We are in handloom and handicraft products, and the USP is we work on no inventory model. So my question is, will ethnic wear can put some place in quick commerce? Is there any
Yeah,
future?
great question, right? So when I spoke about fashion, nobody believed that fashion can be quick commerce. But within fashion, if you look at any, you go to a brand like Zara, H&M, or any brand for that, Rare Rabbit, about 35% is core products, right? It's a white T-shirt, core, same kurti. In Myntra, we would have sold one design in 5 lakh units, or never out of stock. So, in terms of understanding what is your core capsule, right, which is going to be your hero products, which you can put it for a quick commerce capsule at a sharp price point, which but it's core, so that you don't have to. And that's where categories like socks, wallets, innerwear, core T-shirts like hoodies have gone in, and not only that, which is plain, but also designs can be core, right? This Onitsuka shoe is from 1966. The same design is selling for only 60, 70 years, right? So in your company, look at about 30-40% a small capsule. You try and do a A/B test, right? And the same handloom can work differently in different micro markets. So it's अगर एक जगह काम नहीं कर रहा doesn't mean it's not working on quick commerce. So it may not be working on quick commerce for that micro market. Maybe you have to expand the cohort and look at it separately. So it's a combination of selection strategy and the micro layout strategy, which you have to talk to those people and then sort it out.
Awesome. On that note, I want to call it a wrap. Thank you so much. I know both Anshu and you made an exception to be here in person today. And a huge round of applause, please, everyone, for Ramesh. Thank you so much, Ramesh. A small token from our side for making it.
Oh, we just get a picture.